Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Monday. The markets are back open. So what's going on today? Well, it's kind of flat. NASDAQ's up about 50 points. Dow kind of flat. So we're stuck at this 4,100 level on the S&P, 4,100. We move 50 points above it, maybe 50 points below it, but we're really just moving in this sideways pattern, right? We're moving sideways. Now, what this does is it's building up energy for the next big move. Now, the big question, of course, is what direction will the next big move be in? Well, my take is that it'll be lower, that we're going to come back down and retest those October lows. Now, some people do think that this is a new bull market. We're going to rally higher. Now, the one thing that the bulls do have going for them is a lot of people are starting to short the market. A lot of people are piling on the short trade. And sometimes this results in a short squeeze where they could pop this up to the 4,200 level. But even if that happens, I still think we're going to come down lower. I just think the market is ready to give some back, to come back down and retest the October lows. That's just my take. Yours may be completely different. Let's move over to the real estate market. Now, over the weekend, well, there's always good news in the real estate market, right? I mean, a lot of people believe that we're at a bottom. We're at a bottom in the real estate market. Now, the reason for this was fascinating to me. People think we have bottomed out because the home building stocks are starting to go up. Well, they've never really gone down. They've held very tough. They're at record high levels, right at the record highs. Why are home builders at record highs when we're having this big cutback in the number of sales, the number of transactions? Number of transactions are down about 30% year over year, but yet home builders are at record highs. Why is that? Well, you see, here's the thing. There is a lack of inventory, right? That's what everybody points to. There's a lack of sellers, right? As sellers of existing homes. They don't want to sell right now because they're waiting for the Fed to pivot so the market can move back up and they can get the price that Billy Bob got. Well, that may or may not happen. I think the Fed will eventually pivot, but I don't think the prices are going up to where Billy Bob got out at. Now, the new home sales is really the only game in town, right? So there's not a lot of existing homes for sale, but there's been a lot of building and a lot of new homes are available for sale. And the new home market usually makes up about 10 to 15% of all transactions are usually in the new home market. But right now it's over double that. It's making up about 30%, or 1 out of every 3 homes sold right now is a new home. You see, what the new home builders do that the average person doesn't do is they buy the interest rate down. They're buying it down. Now, let's say interest rates are running around 6.5% for the 30-year mortgage, right? But they'll buy it down, maybe down to 5%, maybe down to 4%. This entices people to come in and buy their homes. And 1 out of every 3 homes being sold right now is a new home. Okay, so these new homes are being sold and the home building stocks are hitting record highs. They're jumping to the record high levels, right? Now, is this a good time to short the home builders? Well, I think it's not. I think that eventually it will be, but not just yet. Now, why do I not think that right now is a good time to short it? Well, they could still go higher, right? Their earnings could come out strong. They're not really that overpriced. They're at PE ratios of right around 10 and they're at record highs. Okay, but it will become a good time to short the home builders when we start to see the forced sales come onto the marketplace, when you start to see foreclosures coming on, when you start to see short sales coming on. But Mike, that's not going to happen this time. Oh, it will happen. Short sales will come back. Foreclosures are going to happen. Now, right now, I'll be the first to admit that these are kind of the good times, right? These are the good times. You see, right now, there are a lot of job losses, but we're not in that recession yet. Now, the last jobs, the first time unemployment jobless claim number came out about 260,000 for just the last week. Now you multiply that by 4, we're losing about 1,000,000 jobs every week. 1,000,000 jobs every week, right? Not every week, every month, excuse me. 260,000 a week amounts to about 1,000,000 a month, or 12 million jobs a year. But this is the good times. We're still in the good times. There are people still hiring. Now, Chipotle, you can still get a job at Chipotle if you want to make burritos. So people are still hiring, right? Well, here's the thing. Okay, so they're saying that the jobs, like the unemployment rate, the government will tell you it's at 3%. But you know, these numbers, there's something wrong here, because the tax revenues that the government's receiving is going down this year. Yet we're at what 3% would basically be full employment, yet the tax revenues are going down. Well, what's really happening? So you're getting these layoffs, and these are the high-paying jobs, right? They're the high-paying jobs. I have a lot of friends, they're making 200,000, 300,000, and now they're on unemployment, and their unemployment will last, I guess, about 6 months before they have to get desperate and take another job. Now, a lot of the jobs that are available aren't paying the 200 or the 300,000, so they might have to take 2 jobs to make up for it. They have to take a job at Chipotle and maybe a job at Lyft or Uber. And that still doesn't come close to what they were making, but it does count for jobs, right? So the job count, they're counting these as, one person working 2 jobs. Well, that lowers the employment rate, right? Lowers the unemployment rate down to 3%. It also lowers the tax revenues that we're taking in, because these are 2 low-paying jobs to replace the one high-paying job, and they're not bringing in enough tax revenues. The government's not. So we're going to start to see forced selling. Now, not yet. Jobs are still available, I'll admit that, but they are starting to ramp up the foreclosures, right? There's a 1.5 million people behind on their mortgage payment right now, 1.5 million. Now, what if those come onto the marketplace in the form of foreclosure? Now, some of these are going to either sell their house, right, to take the equity out, and, well, a lot of them will make up the payments. They'll find a new job and start to make the payments again. But 1.5 million right now are behind on their mortgage. Now, it's an interesting statistic. There's 20 million U.S. households are behind on their utility bill. They don't have enough money for it to pay the utilities. Yeah, they're still making that mortgage payment. They're still trying, right? But they can't make the utility bill. This is going to result in the problem, right? Now, in the old days, what would people do when they needed money? Let's say you own a house and you're getting these bills piling up, inflation, food, gas, you're having some things break down. Maybe you need to replace the heater. Maybe you need to put a new roof on the house. What would you historically do? Well, historically, you'd go and get a refinance, right? You'd refinance your house and you'd pull some money out. But the refinance market, people can't do it now, right? Because they're locked in at 3%. No, since they're locked in at 3%, they surely don't want to refinance at 7%, right? So they're going to go out and get a HELOC loan, a home equity line of credit. But you see, these are starting to dry up. They're starting to dry up because the regional banks are in trouble. A lot of the regional banks are the banks that make these HELOC loans. So people that own a house are really having trouble getting money like they used to be able to get. You see, this was what pushed the housing market so much higher. You could just refinance, take the money out. The economy was booming, and jobs were prevalent. Everything was great. But right now, people are locked into that 3% on their home, so they can't refinance. The HELOC loans are going away because these regional banks, well, they're out of money. They don't have any money. People are pulling deposits out of them. They have about 10 billion a week is what's being pulled out of these banks. People don't trust the banks anymore. I can't believe that the banks, I don't trust them anymore. I think the banks are in trouble. Now, we had a good weekend. I did not hear about any banks that went out of business this weekend. Now, maybe there were some that got bailed out over the weekend. I'm not sure. But the banking system's in trouble. So people are having trouble getting home equity line of credit. And those those are high interest rates, start about 9%, okay? So they're having trouble pulling money out of the house. So what are they going to do? Well, they got their credit cards maxed out. We're at $1 trillion in credit cards right now. That's a record high, by the way. And the $1 trillion of credit card debt that's out there, that's get collected at about 20%, 22% to be exact. So they're pulling in billions and billions of dollars just in credit card fees. So, okay, so the credit cards are maxed out. They can't refinance. Home equity line of credit's drying up because the regional banks don't want to make these loans anymore. They don't want to be the bag holders. They're out of money. The credit is starting to tighten up. Well, what's going to happen? This brings on the forced selling. Forced sellers come onto the marketplace in the form of foreclosures. Now, what else has happened in the last 2 or 3 years? Well, a lot of people went on forbearance. Over 5 million people went on forbearance. Now, what exactly is forbearance? Well, it means you don't have to pay your mortgage. Now, do you still owe that money? Absolutely, you still owe the money. Now, even though you're not paying the money, you still owe it. So it's being accumulated. What happens when you still owe the money? Well, interest piles on top of the money that you owe. What else do they pile on? Well, the banking fees, because you're going to have to get what's called a loan modification. Maybe you go out to a 40-year, maybe a 50-year, maybe they'll give you a 100-year loan, but they're going to have to do something because you can't pay back the money, because you didn't save the money, because you weren't able to save, because you were on forbearance. You couldn't even make your regular mortgage payment, but now that mortgage payment has gotten a lot bigger. But Mike, it's all going to be okay because the equity went up. Look at my home, Mike. I look at Zillow and my equity is just skyrocketed. Look at, I'll be the first to agree that you could still sell your house right now, get some equity out, right? That's what Billy Bob did. He sold at the top. He pulled out all that equity and he's on vacation now. But you see, here's the thing. All that equity in your house that you watch, you look on Zillow and you go, oh my goodness, look at, I made another $100,000 in the last year. Look what Zillow says my house is at. Yes, you have equity, but that's if you sell. And if you sell, you got expenses. You got to pay the real estate broker right here. Selling costs will run you about 7% to get out of your $1 million house. Cost you about 70 grand. So to get your equity out, you're going to have to sell. Now, if you don't sell, is your equity still going to be there? I'm saying no. I'm saying that the equity is going to get wiped out. I'm saying that as we circle the drain lower, this equity goes away. So this feeling of being wealthy, being rich because you have equity, that's right now. These are the good times. Jobs still available. Equity is still there. But what happens when we start to go to the bad times? The recession hits, the equity goes away. You're not feeling rich. You go to the bank, they won't give you the HELOC loan. All of a sudden you're going, but I can't refinance. I'm locked in at 3%. Well, you can't refinance anyways because you got negative equity. Look, at this thing's going to blow up. A lot of people are going to lose their homes. A lot of people are going to become what I call forced sellers. Now, a lot of people say, you know, Mike, you're so negative on your channel. All you talk about is how the housing market's going to go down. Look, there is going to be a lot of opportunities coming. I just am warning you what could happen, what I believe will happen, and that's just creates a decision for you of what you want to do. But if you prepare yourself, there's going to be a lot of opportunities. You start to save money, and maybe you want to buy an investment property. They're going to be readily available. Maybe you want to buy a house that's going to be half off. They will be readily available. A lot of people don't agree with it. A lot of people, they get upset when I start talking about this stuff. If you want to keep your friends and if your family close, don't talk about this stuff with them. They don't like it. Matter of fact, they get really upset. They get really anxious because they're looking at Zillow just like you're looking at Zillow. They're thinking, oh man, I'm so rich. I'm going to be a millionaire. Maybe the way this is going, I'll become a billionaire. My house to the moon. Houses are going parabolic. They're going to go like Bitcoin. They're just going to skyrocket $1 billion each house. Not what I believe. You guys know that. But it's just my take. My take is we still got about 40% to the downside just to get back to the average, the long-term average, the mean. Just to get back to the mean, we got to come down by about 40%. 40% just to get down there. And look, we could overshoot that to the downside. We could drop more than that. It gets a little bit scary, and I don't want to scare anybody. I'm just telling you, opportunities coming. If you don't have to buy a house right now, sit back, relax, wait. You will be rewarded. Anyways, if you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Enjoy your day. Bye-bye now.